I didn't write anything on this. We're going to keep it simple. Sometimes that's what it's about. Sometimes it's about keeping it simple. And that's what we're going to talk about today, is should you keep it simple or do you need a more complex company structure? How about that? Nice. That's a good one.
I'm Mark Olson. Luke Gibson and I have a combined 50 years in construction as fence contractors. In that time, we have both experienced failures and success. We travel the country talking with other contractors who share their experiences in hopes that their stories can make you a more successful contractor.
And big disclaimer on all this information. I am neither an attorney nor an accountant, so this is informational for informational purposes only, and I highly recommend that you seek the guidance of a licensed attorney and accountant in your state to make sure that you're doing everything above board. So there's something to be said for simple. And if you're just starting out in your construction company, maybe a sole proprietorship is best for you. That's going to be the easiest thing to deal with. You've already got a social security number. You won't have to go file for an EIN. And you can basically just keep a separate checking account for your business as you do for your personal stuff. So if simple is what you're looking for, a sole proprietorship is probably the best thing for you. The big thing that I would warn against there and in any company is to keep everything personal and business separate. That's where a lot of people go wrong. Now, why do you need to keep that separate? The big reason to create a company structure other than a sole proprietorship is to limit liability, take tax advantages. That's the only two things, is to take advantage of the taxes and to limit liability. So what happens if you mix your business and your personal together is they can do what they call piercing the corporate veil. And that's why people get into LLCs, s-corps, and other things. As a sole proprietorship or a partnership, you don't have that protection from litigious activities. If you're in a field where there's not a lot of people getting sued every day and there's not a whole lot of legal threat and you don't have a whole lot of assets, then keeping it simple is probably the best thing for you. But if you're in a field where there's lawsuits going on every day, like let's say a doctor, you're opening up your own practice, or things like construction. I would definitely consider construction one of those litigious fields, meaning that people are getting sued on a pretty regular basis. General contractors suing subcontractors, subcontractors suing contractors, homeowners suing contractors. It's just a whole mess of people that are upset with the way something's happened and may want to sue you. So the reason to have one of these other types of organizations is to protect your assets. And one of the places that I found that was in bankruptcy. And that's something people don't like to think about, but that's one of the places that I would say is the most common for piercing that corporate veil to become important. If you're in business with just you and one other person and you think you're going to get along great forever, then you could have a partnership. This is probably the only type of entity that I would never recommend. The only reason that somebody would open up a partnership is if there was more than one person. You and your friends start up a bakery, or you and your friends start a construction company, and you want to keep it really simple and it's still real small and there's not a lot of opportunity for somebody to sue you and try and get your personal assets. If anything happens, it's a lot of fighting, and partnerships, you usually don't have what's called an operating agreement, a very strict operating agreement. So when there's a fight, nobody knows how to deal with it. And so partnerships, especially in construction, can sound like a great idea, but I would probably stay away from them. There's also tax advantages to using something like an LLC or an s-corp, or maybe if you're really big, using a c-corp, which is the last option that we'll talk about. So the two most common types of businesses that contractors use are going to be an LLC or an s-corp, and there's not a ton of difference in either one of those, but there are some differences you need to be aware of. What's nice about an LLC, and hang on, fun fact.
Fun fact with Mark!
LLCs were developed in Wyoming, and Wyoming was the first state to recognize an LLC. So we're kind of proud of it here in Wyoming, and that's what our company operates as. And I'll tell you why we like it. It's simple. We don't have a lot of paperwork requirements with the state. The Secretary of State doesn't make us file meeting minutes. We don't have to go through a lot of hurdles and things like that that an S-corp does or a corporation does. So an LLC allows us to keep things very simple while still taking advantage of the legal entity separating the LLC from us personally, and gives us the tax advantages. So in an LLC, we take what are called guaranteed wages, as opposed to real wages. So there's no taxes held out. We just take draws, basically what are draws throughout the year. And then at the end of the year, we have to pay all the taxes on that money. The next best thing to an LLC is going to be an S-corporation. An S-corporation has a few more filing requirements and a few more meeting minute requirements, and it gets a little bit more technical. Not a lot more so than an LLC, but there are requirements that you need to do. And if you don't follow all those requirements, then you can actually have your what's called the corporate veil pierced. And that means that if there was a lawsuit and they found out that you didn't do everything by the book and keep minutes of it and keep records of everything that you were supposed to do, they can actually pierce it and then still come after you personally. And that would defeat the entire purpose of having a legal entity separate from yourself. The other way that corporate veil can be pierced is if you don't keep your finances separate. And that goes for any business. It doesn't matter if it's a partnership, an LLC, an S-corp, or a corporation. Anytime you don't keep those finances separate, in a partnership you really don't have any protections anyhow. But anytime you don't keep those transactions and those entities completely separate, 100%, then you can be, the corporate veil can be pierced and they can come after you personally. And the way most people do that is through vendors, and it's using something called a personal guarantee. And so when you personal guarantee it, it allows them to not only come after the company for it, but they can come after you for it. And that's where, in bankruptcy, that's how they get around that stuff. So if you see something asking for a personal guarantee, then that's what it's all about. And chances are, if you're a small construction business, you're going to have to sign personal guarantees at the bank, probably through your vendors and other places. So just know that just because you have this separate company, if you get into trouble, they can definitely come after you and have you make good on the debt that you've incurred. So now a hybrid of the S-corp and the LLC is you could be an LLC and ask the IRS for an S-corp election or take an S-corp election. And what an S-corp election allows you to do is it allows you to then be treated like an S-corp with the IRS, but still remain an LLC and get the best of both worlds. And that's what our company has chosen to do because it's simple and allows us the best of everything. And what I mean by that is that we can still take draws and things of that nature, but we are considered employees, so we can qualify for things like workers' comp, should we ever get hurt on a project. And an LLC, what we do is we take what's called guaranteed wages. There's no taxes, there's no Social Security, there's nothing like that, but at the end of the year, you're responsible for all that. So you've got to go back and pay all that. On an S-corp, what we can do is we can take what's called reasonable, I think the IRS says we have to take a reasonable wage, and we pay all the employment taxes on that reasonable wage, but then we can take draws for the rest of our earnings, and so that can be paid out based on your profits or whatever else. That's the way most people like to take their profits. Legal requirements for a C corporation are much more strict, and it can be a lot more cumbersome to operate under a C corp. Most people don't find that to be a benefit until you get into large corporations. Think Walmart, Target, Facebook, all these big corporations, they're all C corps. And C corps file taxes, the corporation pays taxes, and then all the owners of that corporation have to claim the profits on their taxes as well. So that's where you get the double tax, and that's why a lot of people don't use that until they get into great big huge company structures. It's just not real beneficial to them. In an S-corp, in an LLC, and in a partnership, we don't have those requirements. Those companies file a return, but all of that income or loss flows through to each one of the owners or members, and then they claim it on their tax returns, so you only pay tax on it once. Tip number 1, in the beginning, a partnership or a sole proprietor could work, but you're going to want to move quickly away from that based on the advice of your tax preparer, because there's a lot of benefits to using a different type of organization. Tip number 2, avoid partnerships altogether. I don't think they're any good. There's really not a lot of advantage to using a partnership over an LLC or something like that. It doesn't add a lot of complexity, so I would probably just stay away from a partnership altogether. Tip number 3 is have a good operating agreement. And you're going to need an attorney. Whatever structure you have, make sure you have a good, solid operating agreement and you know exactly what the rules are. The rules can be as simple or as complex as you want. Our operating agreement runs about 40 pages. So there's a lot of things that are covered in there, like how often we have to have meetings, who runs the company, who's chosen to run the company, who can get paid from the company, and a buy-sell agreement. There's a lot of stuff covered in an operating agreement, and regardless of what kind of structure you're going to use, if you're going to be in business with any more than one person, and even if you are just a sole proprietor, At some point, you may want to bring another owner in, and if you have an operating agreement, that makes it a lot easier. So always have a good, solid operating agreement. Tip number 4, whatever you do, keep it as simple as you possibly can. The work's hard enough as it is, and you don't need to add additional complexity to anything you're doing just so that you can say you have a C-corp. There's no reason to have a C-corp unless your tax preparer says there is. C-corps are more designed to bring a whole bunch of investors in, so when you're not going to be the sole owner of it anymore and you're running a great big huge company, it's set up more for when you're going to start selling your stocks and you're going to get into that being a publicly traded company. That's what C-corps are set up for. They're not really set up for the small shops like us. Don't make it more complicated than it needs to be. There's no benefit to doing that. In fact, there could be a lot of drawbacks and you're just making life more difficult. Really, do I have a fifth tip? Oh yeah, my 5th tip. The 5th tip is regardless of what kind of structure you choose, make sure to keep everything separate. Do not mix personal with business. Keep your business stuff separate from your personal, every single purchase. If you don't keep things separate, you're defeating the purpose of having a company organization, because anybody and everybody that wants to come after you for something, pierce that corporate veil and then come after you personally for everything, regardless of whether or not you've signed a personal guarantee. So that's a little bit about the different types of company structures that exist out there and which one may be best for you based on your certain circumstance, as well as 5 tips to avoid when you're starting your contracting business. And until next time, you have a good day.